This is John Polemy of the Actionable Intelligence Alert. Today is February 4th, 2018. And today I want to start out with a short video. I'm going to introduce this guy that you see on the screen. His name is Dan Pena, and he's a guy that basically does motivational, he helps people to become high performance people. And his claim to fame is he used to be the CEO of Great Western Corporation. It was an energy company that he basically started with $820 and cashed out with about $500 million. And for the last 25 years, he's been mentoring people, and the people that he's been mentoring have created a cumulative $50 billion in wealth. That's why he's called the $50 billion man. Now, this guy's very direct. He grew up in East LA in the barrio, but I've watched a lot of his videos. I've read a lot of his writings, and some of his videos go back to the 1990s. And he is very astute. He is very street smart, and he is very intelligent. However, he is very politically incorrect. And the reason I'm going to show this clip is that he welcomes people to email him, follow him on Twitter, LinkedIn, whatever, ask questions. He gives speeches for free. He doesn't charge for any of this stuff that he does. All this stuff that he does, motivational performance stuff, is for free. I don't know why he does it though. But he is an outstanding businessman. Some of the things that I've read that he said, he's very good and very intelligent and street smart. But he's not a snowflake, and he's not politically correct. So I want to play this little clip because I think people still aren't getting it through their head about cryptocurrencies, the average person that's monkeying around with these cryptocurrencies. The mania, the bubble is over, guys. It's popped. Now, after the video, I'm going to go in and show you some other things, some previous bubbles and manias of what can happen. And I think what Mr. Pena is about to tell you, I think, is some good. Take it to heart because it's true. So let's go ahead and play the video.
Kids, I mean, don't write me about Bitcoin, please. I mean, I keep telling you, this for the YouTube. You know, Bitcoin could be 1,000 tomorrow, just because it's 8,000 today. I mean, just, I don't give a fuck. So don't ask me. When it was at 19,000, I said, sell half, keep half. That's the only thing I said, which is just smart trading. And you didn't do that, so don't ask me now. But a smart, rich guy I talked to last night, he said, it's like these guys found a $1,000 bill in the street, or they found a diamond in the street, and the diamond went up in value, and now they're investors. They're professional investors all of a sudden. They found a fucking $1,000 bill in the street. 99.999% of the people that own Bitcoin are fucking morons. Retarded imbeciles. That's just it. Some of you in this room fall into that category. You found a $1,000 bill in the street, just say, well, I found a $1,000 bill in the street. If you found a $1,000 bill in the street, what would you do with it? You cash it, right? You wouldn't hoard it, would you? It's exactly the same. You found some shit in the street that happened to go up in value. So don't ask me anymore. Go fuck yourselves, please. Okay.
So it's a little bit to the point, but it's true. It was a parabolic rise. It went to 19,000. The smart thing to do was to sell half your investment, or at least take the money off the table of your initial investment, and then place a stop loss at 20% below, which would have been around 16,000, 15,000, and then you sell. But that's not what people do. That's not what the average investor does. That's not what you guys do. You ride it all the way down, making excuses all the way down. It's going to go up. I'm a hodler. I'm going to hodl. There's only 21 million. I've heard every excuse in the book. Guys, when something goes straight up, like a rocket, it eventually runs out of fuel. It has sucked in all the marginal buyers that are going to buy it. I know there's 7 billion people in the world. They're not all going to buy Bitcoin. It's the same thing with internet stocks, with housing back in 2008, with gold, with uranium, with the South Seas bubble, with tulip mania. The human psychology never changes because human emotion of fear and greed takes over. And that is what has happened today. Now we're at 8,000, 9,000, the things fluctuating around. This is going to turn into a bull trap. And a bull trap is it drops to 8,000, then it bounces to 9 or 10,000. You think, okay, that's the bottom. I'm buying the dip. And then it sucks in more money and then it sells off again. I don't know how far Bitcoin is going to drop, but it's going to continue dropping. I have done some research and I've been able to determine that the cost of production of a Bitcoin is about $4,000 to $5,000. So we can at least see it drop to there, to cost of production. Again, I go back to what I've said before. What is the utility value? What is the utility of Bitcoin? What is it used for, except for as a speculative vehicle for people that have no particular insight or knowledge about finance or anything else related to investing to jump on a speculative bubble? That's all it is. It's no different than a Beanie Baby. No one's using Bitcoin for anything except for speculation. So let me transition over to my charts. Okay, so now we're going to take a look at some charts. So here is the most current Bitcoin price that I pulled up. And it goes back to March of 2017 when Bitcoin was, before it started its big ramp. So this is what I'm talking about on a parabolic move, when it goes almost straight up like a rocket ship. It went up to 19,000 or 20,000, whatever it was, and then it started selling off. And then you see it bounces, guys, because people figure, well, it's dropped, it draws in capital. I think it's dropped, I'm going to get back in. Then it drops. And then the psychology goes from fear of missing out. Remember, we talked about that before. Fear of missing out. I'm going to miss out on this big new thing that, this is right around the holidays too, right? Between November and December. That's when your ex-brother-in-law was at the family Thanksgiving. The goofy doofus brother-in-law was telling you how much, he happened to buy it back here, and he was telling you how bragging about his gains. So you had to get in. And that's what fueled this thing. People were talking about this, and it got hyped up with the media and social media, and the thing went viral. This is a perfect example of viral, internet viral, taken off. And that's what happened. And now it's dropping. That's what these things do. They go parabolic and then they peak. Now, we've seen this before, guys. This is a chart of a company called JDS Uniphase. And JDS Uniphase was one of the darlings during the tech bubble that we had back in 1999 and 2000. And you'll note that the stock up to this point, before going parabolic like a lot of tech stocks did in 1999, because the internet was just really hitting its stride then. And we had a lot of speculation going on, a lot of money pouring in, a lot of people were drawn to it, a lot of entrepreneurs, a lot of scamsters, and everybody saw a buck. So everybody was starting internet companies, and everybody was doing this, and the internet was going to do that. And this company supplied infrastructure to enable that. It's a legitimate business. It had legitimate sales and profits. The problem is that the same thing happened. People started thinking about extrapolating the current circumstances of a growing internet, indefinitely into the future. And well, it could double, it could triple, it could quadruple, and that's what takes over. And then, of course, the same thing was happening. I mean, the internet, social media wasn't as developed as it is now, but we still had CNBC, we still had newspapers, we still had people hyping stuff. And you see what happened. This thing went nuts. This is no different. This thing went up 12 times in about a year. That's no different than what happened with Bitcoin, guys. So we've seen this before. Look what happens. It's a moonshot. It's a rocket ship. What happened? They sucked in every last buyer. Yeah, there was 7 billion people on Earth then. They weren't all going to buy shares of JDS Uniphase. So what happened? The last marginal buyer got in, and then it dropped. And what usually happens, this is a perfect example, and I think you're going to see it probably with Bitcoin. You get what's called a dead cat bounce. It comes down. I'm listening to all these Bitcoin experts. Well, you got to hodl. You've got to hold. It's going to come back. We're going to change the world. Well, JDS Uniphase and all the internet companies are going to change the world too. It bounced, as you can see. New buyers came in, or people that sold short covered their shorts. But look in the end, guys, look where it ended up. It ended up back where it started, and it has never recovered. That's what happens in a bubble. We've seen it before. And I can show you, I could spend 8 hours on a call showing you this over and over and over. Look at the chart of JDS Uniphase during the internet tech wreck bubble. Look at Bitcoin. Are you seeing a pattern? This is not unique. Bitcoin's not going to change the universe, just like JDS Uniphase didn't. So one of the things that we talk about when we're trading or investing is we don't try to catch a falling knife. When something is falling like this, okay, what we want to see is, instead of just buying it randomly along these points, you want to see it flatten out and make a base before you get back in. You don't want to try to catch a falling knife, because look what happens when you do. Look what happens when you do. So it's a trading lesson to learn. And people won't do the work. You won't go back in time. You won't read the books that I tell you to read, like Manias and Extraordinary Popular Delusions. They're free on the internet. No one will read them because people are greedy and they don't want to miss out on the next big thing. But you don't realize something. Bitcoin's already passed, but something else is coming down the pipeline. That's what we keep talking about in the newsletter, guys. Bitcoin's, that ball is passed in the catcher's mitt. The pitcher's winding up with a new pitch. Uranium, oil, cobalt, other natural resources. We're in a commodity bull market. We're in the early innings. You can make 10 and 20 times your money. No one's talking about that. But that's where the money is. That's where the next pitch is coming. Let's use the Wayne Gretzky metaphor. How did he say he was successful? He didn't skate to where the puck was, guys. He skated to where the puck was going to be. I mean, these things sound like cliches, but they're actually true and they work. Now, let's go into the stock market. It dropped 666 points on Friday, the Dow did, and there's a lot of panic. But hey, let's look at this, okay? The thing is, the stock market's been overbought for a while. It needed to pull back. People were anticipating the pullback. We're now getting the pullback. There's no reason this thing couldn't come back down into, I mean, all the way down to the 200-day moving average, which is down here around 25.32. I'm not a technical analyst, but we needed this pullback, and now we're getting it. And you're going to see a lot of people come out of the woodwork talking about, is this the end of the bull market? It's not the end of the bull market, folks. Money is tremendously loose around the world. There's a tremendous amount of liquidity still being created by central banks, specifically the European Central Bank and the Japanese Central Bank. And even though the U.S. Fed has said that they are in a tightening cycle, do we really believe it at this point? We really want to see it. But we have to look at all of the central bank actions in totality, because as we said before in a previous video, that central bank liquidity you have to take in totality because it's fungible. And fungible means if the Japanese central bank or the European central bank creates money, it can flow anywhere in the world. It doesn't stay in Japan or Europe. It's going to flow into U.S. stocks or Brazilian bonds or wherever the return is the highest. So I'm looking at this needed correction. It was way overbought, as you can see on the upper right here. In Europe, in these areas, you're extremely overbought. That's what it is. We're now pulling back. You get down in this area, it'll be undervalued. But what we want to see is, we want to see this continue probably to correct over the next couple of weeks or maybe even months. And then you'll see a sideways pattern as a basis for this next move higher. So why do I think the stock market, why do I think the bull market's going to continue? Well, it's short-term overbought, as we just talked about. We needed a correction in stock prices to consolidate for the next move higher. The market, though, is overvalued. I'm acknowledging this. The market is overvalued on a historic basis, but it's most likely going to go higher, guys. And we've talked about why that is. The liquidity is still being produced by the world central banks. That's the fuel for stocks to rise. There's really no near-term risk to the economy nor risk to the market. Now we could get a black swan like an attack on North Korea or some other haywire thing that nobody has predicted or can predict. That can happen. But right now, I don't see anything on the horizon. The only thing that I see over the next 12 to 18 months is continued tightening by the central banks. And like I said before, Japan and the ECB and Europe haven't even started to tighten. It's just the U.S. And I'm not sure the U.S. is going to tighten as quickly as they have said in the past. This Powell guy was selected by Trump because he's an easy money guy. Let's think about this. Trump is a real estate developer. When you're a real estate developer, the whole business is built on debt. He understands debt. He understands interest rates. He understands that he needs to put an easy money guy in there. So there's going to be a lot of discussion. There's going to be a lot of back and forth. There's going to be a lot of volatility. I think that's what we're going to see because people aren't going to be sure. They're expecting rates to go higher, but will they stay lower? How is this guy going to react? How is the new Fed going to move as we go forward, as the economy, we get new numbers from the economy? But right now, guys, it goes back to a previous video I said. World economy is hitting on 16 cylinders. Global PMIs is something that I follow, Purchasing Managers Index. They're all way above 50, and they're moving higher. I mean, we got a report out of Germany last week. Things are booming so much in Germany. Labor is so tight they can't find workers. They're out of workers in Germany. They're putting on extra shifts, and we're seeing that starting to tighten all over the world. We're seeing that in the U.S. The recent reports that came out. I mean, there's a lot of people out there poo-pooing things, but in the end, guys, wages are going up. Commodities are going up. The Trump train is picking up speed. I'm apolitical. I don't care who's in office. I'm going to try to discern or forecast or gameplay what's going to happen. When you're talking about economics, when you're talking about the economy, when you're talking about money and wealth, it's a highly charged emotional subject. And like I said before in a previous video, Trump is like Reagan on steroids. I remember during the Reagan administration, coming out of that Jimmy Carter malaise, just like we're coming out of this Barack Obama malaise, okay? Make America first. Make America great again. Reagan said the same, kind of similar marketing terms back during his term. What was it? Morning in America. So we've seen this before, guys. And Trump is a master showman and master promoter, and he's promoting the U.S. economy. He's promoting America. He's getting people jazzed up. He's getting people excited. The only Debbie Downers are people like Nancy Pelosi and these people live in the high and falutin people in New York City, Washington, D.C., and the various communist university towns around the United States. Most people want more money in their paycheck. Most people want wage increases. Most people want to see other people do well because it validates their optimistic view of things. And that's what Trump's an expert on promoting and exploiting. So I think I was a little bit nervous about this, but I'm all in. Now, I'm not a psychopath. We are going to pay for this down the line. We are going to have higher inflation. We're going to have more debt. And when this thing eventually ends, and it will eventually end, it's going to be extremely ugly. But while the music's playing, as Chuck Prince at Citibank used to say, when the music's playing, you got to dance. You just got to move closer to the exit. So that's where we're at right now. Commodities, I think, are the place to be. We're seeing it in all the commodities are moving higher, guys. Look at them. Oil and gas, oil specifically, copper, nickel. I mean, you go down the line, cobalt, all these different things are turning around because the demand for them is increasing because of increased economic growth around the world, synchronous economic growth. So that's my view right now. I don't see anything derailing that, and at least for the next 12 to 18 months. We'll be watching What are the things we want to look at? We want to watch interest rates. We want to see if we get an inverted yield curve. We want to see if short-term rates go higher than long-term rates. We haven't seen that. We're not even close to that right now. What else do we want to see? We want to watch the global PMIs. We want to watch the PMIs in different countries and in the US. If they start to roll over, if they start to get down under 50, this is not good. That's not what we're seeing right now. We're seeing acceleration in PMIs. So I'm thinking, you know, we're going to have a banner year this year, I think, for commodities. And I think gold is really being ignored, and it's really going to perform over the next year or two. One of the things I wanted to put out here was I just restarted my Actionable Intelligence Alert newsletter. If you have been on my website, you will see that I have some free picks that I've put out there, specifically around oil and gas services, and I think a gold stock, just to give people a flavor of what I'm doing. I'm no longer going to give away free picks. I'm starting my newsletter, restarting it. I had a newsletter during the last resource bull market back in the last decade. I shut it down. I'm restarting it now. You can go to what's listed here. I will say that the first 25 people that email me, and my emails on the page that you can go to here, I will give you a free 3-month subscription. I know I got to prove myself to people before I start charging them money. Some people know me; they're going to go ahead and subscribe because they know me. They know the value that I provide. But to get new customers, I want to I have to prove myself. There's a lot of people out there claiming that they can make good stock picks. I do make good stock picks. So please go there, go to that link there, or copy it and paste it, and look to subscribe to the newsletter. I think you'll find it very interesting. I think if you go to my website, my insight is a little bit off the beaten path, and you get to see things that are not typical of what the mainstream or the average person is seeing. So I hope you enjoyed these videos that I'm making, guys. I ask you to subscribe to them, please. That shows me that it kind of boosts me up a little bit. Also, follow me on Twitter and Facebook. I put a lot of information out there, and I interact with a lot of smart people. And if you follow me on Facebook and Twitter, you'll see you'll start getting exposed to a lot of ideas that you normally wouldn't hear about or see. So thanks for tuning in this week, and we'll talk to you next week.